Hi guys, and welcome back. So we are going straight back into our series on Elizabethan finance and financial reform, and today we're going to focus on crown reforms. So what did Elizabeth and her government do effectively to try to resolve the financial crisis, which we know existed because of the mid-Tudor crisis and the financial legacy that Elizabeth was left. Now, remember, if you don't remember what happened in that, you can always go check out the video on the mid-Tudor crisis again and just recap what had happened. Anyway, Elizabeth I had inherited a country in debt, and she needed to resolve this debt, pay back the foreign loans that Mary had taken out, and ensure that her people were not starving, and create opportunity for industry development to try and benefit the country's economy. Now, to start this process of working out how successful she was in all of these things, I'm going to address her own finances and what she did for herself and for the crown to try and restore money to the monarchy. Now, Elizabeth employed a banker and a merchant named Thomas Gresham, this man who is kind of scarily sitting behind me. He, the point of him was to try to resolve crown finances, and he managed to convince Cecil, so Elizabeth's Secretary of State Cecil, that in order for the embarrassment to be averted, Elizabeth needed to be able to borrow from the nation rather than foreign countries. So if you remember rightly, Mary has borrowed quite a lot of money from the Antwerp exchange, which had very high interest rates, but also Gresham makes the point that, if we're seen to be a monarch borrowing money on a global stage, that makes our country look weaker. And actually, if we can restore the nation's economy, if we can restore the nation's finances, then Elizabeth can borrow from her own people rather than from foreign nations. So with this in mind, he kind of brings in some policies for financial reform. And it led to a number of reforms that tried to improve the English economy. Now, one thing in particular that he did was he started to reform the usury laws. Now, these are the laws that govern the interest levels, and he ensured that the crown was not charged unusually high interest, which is some of the case in some places. So, therefore, the crown were having to pay back less money. Now, through methods like this, he ensured the crown remained solvent, which means, it's not spending more than it takes in. And this was the case until Elizabeth went to war. So by 1565, he had reduced the crown's debts to just £20,000, which is a huge achievement considering that Elizabeth inherited the throne from Mary with over £200,000 of debt. So he's managed to significantly reduce that debt. Now, Gresham is described by John Guy, the historian, as a high priest of market economics and a man whose dark wizardry set up England for its financial stability that underpinned global expansion later on. Now, John Guy actually has written a book recently on Thomas Gresham, all about him, and he portrays him as not a particularly nice person. However, character aside, what he did for England's finances is more important in our A-level. Okay, so when we did our work on Parliament, I did mention very briefly the economic settlement that Cecil brought up in those opening parliaments. Now, I'm going to recap that very, very slightly. So between 1559 and 1563, Cecil also steered a series of measures through Parliament. This was known as the Elizabethan Economic Settlement. It regulated land use for grain and timber, and it dealt with the export of leather, cloth, and iron on English ships. It also included, if you remember, the Navigation Acts and the Statute of Artificers, sought to encourage apprenticeships and control wages. So this was one of Cecil's kind of ideas about how to reform the financial crisis in England. If you remember, also one of the other laws was his silly one about eating fish, if you remember back. Now, the Elizabethan financial state, to be honest, was very apt at remaining solvent and being an effective financial system as long as the country didn't go to war. Now, that's one thing I think in terms of comparison between reigns, it is always foreign policy and it's always war which drives Tudor monarchs into debt because war is so heavily expensive. So until the point where Elizabeth goes to war, her financial reforms, followed through by Cecil and Gresham, actually work quite well. However, as we know, later on in terms of foreign policy, it starts to get it starts to get tense, and tension is building up between Elizabeth and Philip, in particular with the Papal States and with Spain. So as it becomes clear that foreign risks are more likely and need to be prepared for, kind of by the 1560s, Cecil realizes it's imperative to rebuild the navy and the merchant fleet. So he wants to put some money into rebuilding ports and harbours and things like that, and rebuilding the boats. So along with the restoration of the ports, Dover, for example, needed to unblock and repair its coastal harbour. He also wants to repair the merchant fleet. Now, Parliament would not approve of taxation for this because they want to only approve taxation in real emergency. We're not actually at war, this is preemptive, so it's not an emergency yet. And they couldn't loan any more money from the Antwerp Exchange, partly because of what Gresham has encouraged the country to do, but partly because the Antwerp Exchange is not lending England any more money. So Cecil looks for other ideas on how to raise this money, and he actually looks abroad, and in the Low Countries he finds an idea, an ingenious idea, and it is the very first English lottery. Okay, so if you ever wondered where this concept came from that we have today, of little balls flying in with numbers on and somebody winning millions, Cecil was the first person to bring this from the Low Countries to England, and in 1568 he initiated England's first lottery. Now, this was a completely foreign, new, strange concept at the time. And even though the odds were 1 to 16,000 of winning a prize, which is amazing compared to today, where it is 1 in 14 million, and lots of people today keep forking out money for the lottery, don't they? But at the time, these odds were not seen as particularly positive. The plan had been to give 30,000 prizes of a value of £55,000 in their money. First prize was £5,000, which is the equivalent of £100,000 in today's money, so not bad. Other incentives were freedom from arrest for 7 days, to try and entice criminals to come into towns and cities and purchase tickets. So that perhaps shows the kind of desperation that Cecil was brought to by the unpopularity of his lottery. In the end, poor old Cecil's lottery only sold 34,000 tickets instead of the 400,000 it had aimed to. It raised less than £5,000, which, remember, the aim was 55,000. So not particularly successful, and a far cry from the original aim. An emergency 12-month loan was instead raised from London, from the merchants, to rebuild the ports. Okay, so in terms of some kind of conclusion to this, so despite some successes, the Elizabethan financial policy was threatened by a lack of actual, real, tangible reform. She did not want to raise taxes as she feared alienating those who wanted to support her, and she also adopted a far more aggressive foreign policy from 1570. Now, war in the Netherlands and with Spain obviously occurred, which led to huge government spending. In addition, it's estimated that Ireland cost the crown £320,000 in 1600 alone. Okay, so that hopefully shows you how grave the cost of going to war and fighting wars and fighting rebellions and things like that was for Tudor monarchs. Now, Elizabeth left her successor James I a national debt of £400,000, which is 55 million in today's money. 19 years of war with Spain had severely damaged England's finances. Now, ironically, it was the men who did very well financially in Elizabeth's reign who stifled the chance for fiscal reform to really take place. These men did well in the current system, so had no real interest in reforming it. This meant the poor suffered increasingly difficult financial problems, such as the price of food rising by 75%, alongside a fall in wages. So those issues, the impact on ordinary people, what this actually meant in reality, I'm going to talk about in the next video. This was an overview of Elizabeth's crown reform, or I guess lack of it, for you there.